Hello, everybody. Hope you're doing very well, and welcome back to a obviously well, getting stuck in a mood there. What a bad start to the Contenders live stream tonight. Obviously the our first major one after the new move around. So yeah, really excited for tonight's stream. I'm going to be covering a lot tonight. Obviously ENG, my love, ENG. We're going to be starting with that, of course. So chart of the week setup is to begin. Okay, then I'll be going over triangles and how I trade them. And I just want to say this. We are seeing triangles across the board. I mean, across the board on cryptocurrency right now. So triangles are like a must that you need to understand how to trade, because they are just like, you look at an altcoin and it's in a triangle right now. So yeah, I'm going to be covering triangles today. Okay, and then going over a checklist for entering a trade. Okay, and this is going to be like a real key checklist that I'm going to upload to the website afterwards as well, so you can have this and like make sure you're using this. You can like print it off, etc. Okay, so yeah, that's the core of today, and then I'll obviously be at the end moving on to a technical analysis and yeah, then questions and answers related to tonight's stream at the end. Yes, it's going to be a good one. I'm just like so excited, to see the comments throughout the day of people are like killing it. People are killing it in this group. Like already, people are making money. It's amazing. It's just like, I hope that you are as all excited as I am, because like I'm excited for all of you. Like to see the comments of people like really doing so well so quickly is just like amazing, absolutely amazing. I'm just so happy, to help you all out, and it's I'm just blown away by the support, by the love, just everything. Yeah. I'm just so happy to help you all out, and yeah, let's start and keep up this positivity. Obviously, we've got our own community, we've got our own family going on. Everybody's helping each other out. It's just so good. So yeah, just wanted to say yeah, thank you everybody to begin with, and yeah, let's have a good Contenders live stream tonight. Okay, so yeah. Firstly, I want to start with the ENG chart of the week. As you all know, I've been running this coin for the last few weeks, and no surprise, another chart of the week setup that I've given you all has done extremely well. Okay, and obviously being a BTC pair, so this is the thing you have to think. When I give a BTC pair, you only can long it, so you can only be buying these BTC pairs. Okay, it's just like your job to work out your entry point, but it removes half of the equation when you can only long. So I think that's nice when I give you BTC pairs. So yeah, starting with the NG chart of the week. Let's firstly, I just wanted to. I hope Ed doesn't mind, but I didn't check this with him. But I'm sorry, Ed, if you do, but I'm sure you won't. You're such a great guy. I just wanted to start before I go on to chart of the week. Going over a quote that Ed posted in the Discord, and I thought it was just really nice to bring your attention to this, and just wanted to like shout out like, this is what hard work gets you. So this was a quote I saw, and it brought a smile to my face, so I wanted to highlight this before we move on. Okay, and this was obviously discussing the chart of the weeks that I give you. So obviously the chart of the weeks are to sharpen your skills. If I give a chart of the week, the setup is going to be there, and there's going to be a good setup and a good opportunity. Okay, and then you have to try and work out that setup. And I just want to read out what Ed replied about the chart of the week and how well he's been doing on these chart of the weeks. So question about the trade setups. Yes, so Daniel, posted chart of the week. It is for us to figure out how and why. That to me is gold. He wants to make his own setups with the skills he is learning from me. Okay, this group can and will be life-changing. I know that it's going to make so many people rich. Anyway, Ed did $4,000 in 4 hours. That is an amazing gain. Amazing. Just so hardworking. Really good trades. That is what most people make in a month. The opportunities here at Chart Champions, are endless. Everyone here encourages each other and are very helpful. When I started here, he did not even know how to post a chart. Ed, when he first started, didn't even know how to post a chart off of TradingView, and now he's making $4,000 in 4 hours. Well done. I just wanted to firstly say well done, and if you put in the hard work, you're going to get rewarded. Especially with my guidance and help, I can just see this is going to be going so well for everyone. It's just, I'm so excited to help everyone out, and congratulations, Ed. And if you put, when I post the chart of the weeks, try out your entries and try those setups. And yeah, just wanted to start with that. Moving on to ENG chart of the week. So this was my setup. And as you probably know, we actually ended up hitting this weekly resistance, but I'm going to cover that in a second for you all. So I just will firstly show you what I was going through here. Okay, so obviously we had this original move upwards. Okay, so we obviously had a very strong movement up, and this is what I was covering in last week's stream. It might have been in the stream, might have been in the champion stream. I was talking about ENG basically, and this was originally where my entry was made, and I was selling at the weekly resistance. So that was one trade already done, and then it's like one trade done, selling at targets, coming back and buying the pullback. So this was a trade that I'd already completed, and this was my second trade for ENG, and my target was basically this as you can see here, we had an original move up, but I will show you the chart in a second. This move up is on extremely, extremely low volume, okay? And for me, volume is actually a really important metric, okay? So if you move up on little to no volume, then actually that's a bearish sign, okay? So if you move up, if price moves up, you also want to see an increase in volume, okay? If you move up and volume is decreasing, that is bearish, okay? So remember that, and I'll go through ENG of how I got this really nice entry, basically. Okay, so I was seeing this move up, but I was not FOMOing, I was not being greedy, I was waiting for this to come down. As you can see, my entry is below the lower wick, e.g. for me, I like to enter positions, because I'm trading with, a larger capital anyway, I like to enter positions below wicks where the average trader, the average trader that's bought this, okay, they don't know what they're looking at with volume, they buy this off a 0.5 fib, and they will just place their stop loss below the wicks, okay, so they will just, average trader is just going to place their stop loss, just under that wick, thinking that is the invalidation of this trade. Okay, so that is where I generally will be placing my biggest buy orders. Okay, below the wicks to get the liquidity. With everybody selling, e.g., closing their position, that is everybody selling into my buy order. Okay. Although this was with a limit order, it wasn't with a market order. I'll just say that it wasn't with a limit order. But nevertheless, I had a lot of sellers selling into my limit order there. So it was great, okay? Filled the whole position. And that is why when you want to fill a bigger position, you need liquidity. So you need to play, it's very hard on ENG is actually a smaller cap coin for myself. It's not a major. So you can't just be placing big buy orders in the middle of a range. Okay, you have to be, careful with liquidity. So, for me anyway, placing it below the wicks is like my best opportunity to fill larger positions. So, with that in mind, this whole region of 0.5 in the end would have been a nice buy, but for me personally, I just wanted that extra liquidity. So stop entry basically was below the lows, and I know off of the chart of the week entries that everybody submitted, everybody chose long positions in generally a good place. So I know that this setup made a lot of people money, and I've read from the comments it did. So brilliant, brilliant, brilliant. Anyway. All I wanted to say is, entry below this wick. My stop loss, as you can see, you might view this as a random place for a stop loss, but I'm viewing this as a potential swing failure pattern, okay? So I want to get in on that lower liquidity, okay, and essentially create like a sort of buy wall so it won't drop down any further. So, most people, again, if they're entering, they would have their stop loss maybe below the 6.5, look horizontally, work out the stops, but mine is imagined that I would be able to hold this up at least for a reaction, and a reaction we definitely got. So stop loss basic was just to give myself a little bit of leeway in case the sell orders were too big so I could get out at this point. But as mentioned in the champion stream last week with my soft stops, you'll know about this anyway. But target basically this old support, which I imagine flipped to resistance, but we'll cover what happened in a second, okay? But take profit 1 was the 382, take profit 2 was just this old horizontal support that flips to resistance. So this is what happens, okay? When you get an area of support, okay, once that support is broken to the downside, it then flips to resistance. So you got a support broken, it will generally flip to resistance. resistance. And the same, if you have a resistance that's broken, it will flip to support. Okay, so very, very nice. Yeah, so that's just a real key thing to understand in trading as well. So this is just the sheet explained this. So the long entry, if you want all the exact details, 6368. Okay, take profit 1 to 382. Close trade at a horizontal resistance, which I'll show you what happened in a second. Very nice, basically. Stop loss placed at this 6192. For me the invalidation level if I couldn't hold that up. Okay. So now moving on to the reasons why I'm buying at this level. Obviously, firstly, buys placed below those wicks because that's where the normal trader is going to be selling, having their stop loss. People have their stop loss go off into my bids. Okay, number one. Secondly, strong horizontal support. So it's not just like I'm going to be randomly buying under wicks all the time because that would make no sense. You need to have the probabilities in your favor. If you're just trading if you don't have an edge or you don't have the probabilities in your favor, then there's no point in trading. So strong horizontal resistance combining with the 0.5 region that we're in and combining with the 55 and 200 exponential moving average about to turn bullish. Okay, and when they obviously cross bullish, that's very nice. But you like to get in before they cross bullish. Okay. Otherwise, if they cross bullish, then you're kind of a little bit too late, in my opinion. They have got a confluence of factors coming together for a really nice support level. And as you all know, this posted this chart, and then the next day it was up like 14% or something, like crazy high. So let me just go over to this now. Let me go over to ENG and show you what's going on here. Okay, so obviously you had the 0.5. You were looking at 0.5 here. Okay, horizontals. We were looking at horizontals around this region. Okay, if I make this green to properly highlight, we're looking at support. Okay, so you can see a 0.5 on the horizontals, and you have to imagine this is just cross bullish today. But at the time, you were just about to see the 55 cross to the 200. Okay, which is like a bullish cross on your EMAs here. But nevertheless, even before this, you obviously had your 200 as support as well. And you can see how we lost the wick. Okay, so this is what I mean by like swing failure pattern. Okay, so so here is your line of support. Here is your line of support right here. Okay. Average trader that buys this has their stop loss placed here. I need to explain this because this is how I win a lot of trades. Because average trader, Mr. Joe, let's say, has his stop loss placed here underneath the wick. Okay, so what does a larger account need to fill his position? Well, they need a lot of sellers to obviously fill a position. Okay, so when you buy underneath a resistance like this, firstly you get a swing failure pattern. This was not me causing the swing failure because I didn't market buy. I just had a limit order. But nevertheless, limit order placed below here. Okay, and then you get a wick down through the support. So you wick down through this support and you close back above it. Okay, so swing failure pattern, and that's a very bullish sign, basically. Very, very, very bullish sign, a swing failure pattern right there. Okay, swing failure pattern combining with all those supports is like such a nice buy. Really, really is. Okay. And what I wanted to also show you on this chart is, see what I mean here? That the move went up. So the price went up here, but look at the volume. There's no volume. There's literally no volume on that move up. Okay, so there's the move up. And look at the volume. There's nothing there. So when there's no volume on a move up, that's bearish. Hence why, if we'd actually originally bounced off here and the volume moved up, well, then I would have reconsidered and not actually been having lower bids because it wouldn't have made sense. But when I see something move up and the volume is this low, then I'm just thinking, okay, yeah, this is very likely to come back down, and likely to come down, it did. Okay. So that's what I'm looking at here. And you can see here, where we obviously formed our swing failure, well, there's a bar of volume above the 20 MA. So this line here is your 20 MA moving average on the volume. Okay, that's the moving average on the volume. You can see on that support candle, firstly, this support candle right here that caused our swing failure was on a higher amount of volume than the whole move up there. Okay, so that's a higher volume. And second, it was above that 20 MA volume as well. Okay, on the 4-hour chart here. So, that's a nice confluence of factors. Getting orders filled. Very, very nice. Okay. Okay, so that has described how I got into this trade. And now let's go over how it got on, how it went. So very kind of pleasing. Okay, so obviously I had my first take profit was actually set in the order book. So this is one that I had set in the order book. Take profit 1 is obviously where you just place your take profit, in the order book. And I'll show you on the 15-minute chart what happened, because my take profit 2 blasted straight through it with the speed it went. Okay, which is obviously good. But you see, you view here, and I'll show you what happened. So my take profit 1 on the 382 was triggered, okay? But you can see here how we actually, it was triggered, but we actually then formed a nice bull flag. So you get a bull flag, long lower wick as well. That would show better on a lower term time frame. Ooh, if I can find us now. Okay, yeah, here you go. So you obviously get your bull flag. Okay, so you get your bull flag. This is for me, I love 3-minute time frames. Okay, but you obviously move down on decreasing volume. That's a bull flag. Okay, and you also flip that support. So that old resistance. Okay, that old resistance. Where are we? Old resistance here. Resistance broken, flips into support on a bull flag, and you run again. Okay, so my take profit 2 was already up in this higher region, but we actually went straight through take profit 2 onto weekly resistance. Okay, so we actually went straight through it onto weekly resistance. Okay, and I'll zoom out a second now to show you what happens here, a little bit easier to explain. Okay, so you go take profit 1 hit, take profit 2 not set in the books, and it just went straight through. Okay, and at this point we formed a long down lower wick, and I just then replaced my sell order in the books. Okay, so then that's when you see a big rejection wick like this onto weekly resistance. You have to remember weekly resistance is a big resistance level, so it's not one that you just like ignore, thinking it's going to go through next time. So you can't just think something's going to continue up and up and up. Like I did want to get out of this trade. So I basically, what I will do, okay, the way I like to do it is you would take then your from the high of that move, okay, down to the low of that move, sell on the 618. So then when you get that secondary push up, which is generally on bearish divergences, okay, obviously we didn't even take the high at this point, but on your second push up, it's generally bearish divergences, and then I like to get out on that 618, okay, so that's how I planned that trade for you all. So I think overall it was a very nice trade. Yeah, it was just crazy how we pumped up so quickly. But then you see that's why. Look at the volume. Look at the volume on that candle. Somebody done a very big order here. I would argue that it probably wasn't the best buy in the world because they've obviously, I don't know, yeah, maybe it worked out for them. I can't speculate on that. But obviously that's a lot of volume coming in on this very low cap coin. Okay, so that's just something to note. Just something to note. Somebody was going big on their orders there. Okay, so yeah, that was the trade. Okay, and I want to go over here with you all the results of the trade and how this actually is continuing on. Okay. So the results of the trade, yeah, really perfect entry. So this was obviously when you compare this to, this is obviously what the set was like when we're looking at this. So obviously got right in on that lower wick. That was absolutely, couldn't get a better entry. So got the entry on the lower wick. Okay, so thoughts. Price ended going straight through my take profit, take profit 2. Okay, take profit 1 was hit. Take profit 2 went straight through it onto the weekly resistance where I then closed my position. Okay, so I was getting out on that 618. Okay, overall, yeah, honestly very pleased with the setup. Okay, and then point number 3, okay, and this was at 12 p.m. today. So I've been trading heavily today, really enjoyed it. But yeah, at 12 p.m. today, you can see that we came back down, and I'll go over this now, and we retested daily support. Well, I re-entered into this position, so I re-entered on daily support, and then we had a 5% bounce, and that's for me a day maker. So you take profits at a 5% bounce every day of the week. But that was basically, I'll show you what happened. But yeah, this is what I was writing up earlier. So price is now bouncing off the daily support, where I have taken another long for the day, and that was at 12 o'clock. We're now at 7 o'clock. So about 7 hours ago, I re-entered into this position after closing it out. Okay, and I'll show you what's happened here. Okay, so this blue line, okay, let's just clear up this chart a little bit to explain this. Okay, so this is what I'm looking at. So daily resistance here. Okay, daily resistance broken, flips into support. Okay, so it flips into support at that point, and that's for me a good level to be day trading from. When you get an SR flip on a daily, really nice level because you would imagine that bounce to come. Okay, you would imagine that bounce to come, and in the end it got this was a 5% bounce, which is enough for a day trade. Okay, and then I like to explain what I imagine going forwards with these type of trades, with these with how I imagine this going forwards. Okay, so now we are obviously in this range. Okay, this weekly resistance is actually getting pretty battered at this point. Okay, we have hit it several times. E.g., the more times you test a level, the weaker it gets. Okay, so this resistance, one would say, is getting weakened. Let me just mute this a second. Okay, so this resistance is getting weakened, okay, and we do have our daily support below. We've just had that 4-hour bullish cross, okay. So the way that I'll be looking to trade this is in a range until we break the range, okay. So I will be looking to trade this in a range. Obviously, high upper wick equals selling, so you do want to see how we've got another 1 hour 10 minutes of this candle, okay. But as long as we hold daily support, I do not see another reason for not another breakup, okay. So this for me is key support now, and this is key resistance, okay. Well, we can trade this range, okay. Trade this range. Sites basically like on Bolton Chain last week, where obviously that was in a parallel, obviously on a bigger time frame, but your parallel is essentially where you trade the range, okay. And obviously you can get bam 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 like this, it's like a range. So that's exactly what I would expect here on Enigma, to be honest, okay. I will say, if we break down, okay, so I'll give it, just to alert you all, if we break down, this is swing low, or the overall low to the overall high, okay? We obviously have the 618 below us, okay? So that would be your next level of support if we are to break down through this. Then you're looking at the 618, okay? To the 786, okay. So if we lost that daily support, that would be my next sort of region to buy, okay, because I wouldn't give up on this coin. So that would be my next buy region, laddered between the 618 and the 786. But being more bullish on this, we have to say Fibonacci from this overall swing high down to the lows, okay, we still haven't even tested the 236. E.g., there's a lot of space for this coin if it wants to break bullishly over the coming weeks, okay. We haven't tested the 236 and we haven't tested the 382, where that's a big resistance, by the way. That's a big resistance at the 382. But we're talking about that's another 50% away. So that's a big move. Okay, big move. You have to obviously get through 236 first. But we're looking at 236, still another 20% away. But that is a big resistance at the 236 horizontally as well. Okay, you come out to the daily here. And you can imagine, obviously, this 200 EMA is going to be moving down over the coming days as well. So that's going to be heading downwards. And then you would expect to, see something like this, a rejection first time. Okay. So, yeah, that's my thoughts on ENG. I remain totally bullish on this coin still. Okay. It's just, you have to wait to get into a little bit of a position. Okay. Whether you want to be targeting lows or the daily support or the lows. Okay. Or whether you want to be trading the range. Okay. Buying and selling. There's a lot of opportunities still on this coin. Obviously, it's now had two substantial moves in a short space of time. But yeah, with the EMAs crossing like this, with the volume that's coming into the coin, yeah, I will definitely continue to day trade this without a doubt. I really, really, really enjoy it. Okay. So yeah, that's ENG. Okay, Enigma coin. Okay. I will answer this first question. I always take questions at the end, but I'm going to just reference this really quickly. So Chris says, do we need to be trading seriously big sizes to win those types of trades? Should a small size trader stay away from those types of setups? No, no. Like honestly, you could trade this with $100. You don't need a big account size to be taking these type of setups. Absolutely no way. You have to think that this original one that I was on about, I literally posted this one, okay, for everybody, okay, and the entry, okay, that ended in a 45% from support up to weekly, and this one here was another 20%. Any account size can play these trades. It's not a requirement that you have to have a big account size. This is open for anyone, literally. Those are big moves, big moves. 20% in a day, crazy move. Okay. So yeah, that is Enigma coin, and that has covered that. And any other questions I will take at the end. Okay. So yeah, that leaves us finished with the Enigma. I hope that you enjoyed that trade setup, and just like reading from the comments, I know a lot of people got in on this one, and yeah, a lot of people made money on this. So that was brilliant to see. And so yeah, that leaves us with this week's ENG coin of the week. Okay, so yeah, moving on, I do want to just really quickly cover what we left off last week, which was Walton Chain Charter Week, where obviously we were literally at the bottom of this range on Walton Chain. Okay, and I made the comments. Okay, so this is what we were looking at last week. Okay, and then this is what has happened today. Okay, so this is what we were looking at literally last week on Walton Chain. Okay, we were literally at the bottom of this range, and I said I'm still holding confidence in this coin. I'm still accumulating at the bottom here, and today, obviously, you can see the big move up that's had. Okay, from our video last week up to the middle of that parallel channel in the end, where it's finding resistance. So you're getting resistance there, but yeah, I just wanted to like bring your attention to like literally last week that anyone watching that stream could have bought the bottom with me there, because that setup was still totally in play last week, and then obviously what that's turned into. Another amazing trade. So yeah, just wanted to bring your attention to Walton Chain and how that moved amazingly. Okay. So that brings us to like the core of today's lessons, okay, where I want to firstly be going through this checklist, and secondly I want to be going through the triangles, and then we can go over some how they're actually showing at the moment with some altcoins. So yeah, firstly though, I want to just give you all this checklist that for me is like so important that you all do this, even if you think you're a very good trader at the moment, that you still are making sure that you are doing these things before you enter. Okay, so I've put this is going to be uploaded to the website, but I've made like a trade entry checklist that you can just either print this off or mentally check it off before you're entering a trade. It's just, I see comments from all types of people. Obviously, we have, very beginners up to, quite advanced traders in the group. So there's a mixture of everybody. Some people that have literally just started trading. So this is going to help, should help everybody out, I believe. And this is just called the trade entry checklist. Okay, so very simple. Okay, so I'm going to read it out for you all here. I'm going to try and go through this fairly swiftly. Okay, but basically when entering a trade, it is extremely important to pre-plan the trade, okay? So if you are entering a swing trade, basically when you are a swing trader, you have such a luxury, okay? Swing trading, in my opinion, is the easiest type of trading, okay? Because of the luxury of time, okay? As a scalp trader, you have no luxury of time. You have to think in the moment, you don't have time to plan. So, as a swing trader, you have the luxury of thinking through your plans before the middle of that parallel channel in the end, where it's finding resistance. So you're getting resistance there, but yeah, I just wanted to like bring your attention to like literally last week that anyone watching that stream could have bought the bottom with me there, because that setup was still totally in play last week, and then obviously what that's turned into. Another amazing trade. So yeah, just wanted to bring your attention to Walton Chain and how that moved amazingly. Okay. So that brings us to like the core of today's lessons, okay, where I want to firstly be going through this checklist, and secondly I want to be going through the triangles, and then we can go over some how they're actually showing at the moment with some altcoins. So yeah, firstly though, I want to just give you all this checklist that for me is like so important that you all do this, even if you think you're a very good trader at the moment, that you still are making sure that you are doing these things before you enter. Okay, so I've put this is going to be uploaded to the website, but I've made like a trade entry checklist that you can just either print this off or mentally check it off before you're that was still totally in play last week, and then obviously what that's turned into. Another amazing trade. So yeah, just wanted to bring your attention to Walton Chain and how that moved amazingly. Okay, so that brings us to like the core of today's lessons, okay, where I want to firstly be going through this checklist, and secondly I want to be going through the triangle angles, and then we can go over some how they're actually showing at the moment with some altcoins. So yeah, firstly though, I want to just give you all this checklist that for me is like so important that you all do this, even if you think you're a very good trader at the moment, that you still are making sure that you are doing these things before you enter. Okay, so I've put this is going to be uploaded to the website, but I've made like a trade entry checklist that you can just either print this off or mentally check it off before you're entering a trade. It's just, I see comments from all types of people. Obviously we have very beginners up to quite advanced traders in the group, so there's a mixture of everybody. Some people that have literally just started trading, so this is going to help, should help everybody out, I believe. And this is just called the trade entry checklist. Okay, so very simple. Okay, so I'm going to read it out for you all here. I'm going to try and go through this fairly swiftly. Okay, but basically when entering a trade, it is extremely important to pre-plan the trade. Okay, so if you are entering a swing trade, basically when you are a swing trader, you have such a luxury. Okay, swing trading, in my opinion, is the easiest type of trading. Okay, because of the luxury of time. Okay, as a scalp trader, you have no luxury of time. You have to think in the moment. You don't have time to plan. So as a swing trader, you have the luxury of thinking through your plans before you execute them. Okay, and you have to think through the plan before taking that position. Okay, so before you take any position, make sure that you have run through this checklist to make sure that you have met the criteria for opening a new trade. And if you can only tick 2 of these boxes, don't take the trade. Okay, so there's 4 tick boxes. You need to make sure that you're ticking all 4 before you enter the trade. Okay, otherwise you're gambling. Okay, and you do not want to be a gambler. You want to be a trader that is consistent. Okay, very, the key thing that I will preach is consistency. We're not just about one trade. We're not just about a one trade and then losing it all on the next trade. That's not consistency. You get a 20% gain and then your next trade you lose 20%. Doesn't matter, does it? We're after the consistency, winning. Obviously we're going to get losers as well, but we're after that consistency of the majority of winners. Okay, so that's what we're after, and that's why having some sort of either a mental checklist or an actual checklist that you can print this out and use is going to be so key, because it's going to integrate a form of consistency to your trading. Okay, so it's really, really important. Okay, so yeah, these are the points. Okay, so basically point number 1, that you've thought through the entry of the trade setup. Okay, so trade entry should be placed where you have the probabilities of winning the trade in your favor. So you're not just picking a random point at the chart, but you've actually gone through something like like how I'm teaching you with these like setup of the week, that you've gone through and you've worked out a good entry, be that on fibs, be on Elliott waves, be on your whatever indicators type of thing you're using, something that's identified an edge for you that is giving you the probabilities in your favor that trade is going to win. So basically point number 1, that you just have to have identified a setup and an entry that makes sense. Okay, for example, when this was moving up 20% on the day and you just find yourself entering buy because you see too many times I've had comments and messages from people that have lost money because they saw their favorite coin up 10% on the day and they just bought it. They just bought it because it was 10%, and then what happens? The next day it's down 10%, and they lose everything. Okay, and this strategy, if you're mentally doing this, you will never find yourself randomly FOMOing in, or randomly FOMO selling, or panic selling, or panic buying, or those sort of situations, because you're going to actually have thought through this trade entry. And does it make sense? Does it make sense to just randomly buy? No, it doesn't. Okay, so you wouldn't be able to tick that box if you find yourself FOMO buying. So this is going to help tick that box that you've recognized the trade entry and you've actually thought it through. Okay, you've planned your entry. Okay, so that's tick box number 1. Okay, number 2, that you've thought through the stop loss of the trade. Trade stop loss should be placed at an area of where your trade setup idea is invalidated, and this is just key. No trader, no trader in the world, 0 traders are going to win every single trade they take. Losing is a part of trading. Okay, you have to accept losses. They are normal in trading. Nobody's going to win every time. Okay, nobody. So you have to realize that losses are normal, and when you realize losses are normal in trading, you will have your stop losses, mental stop loss or hard stop loss. You're going to have some form of protection in place that when it hits that level, you're going to be closing out your trade. Okay, and that's just going to protect you for those occasions where you do have a setup in place but it's invalidated. Your setup is invalidated. You have an entry of getting out, a way of getting out of that trade, rather than just holding a bag. Too many people lose so much money from just buying and holding, thinking, oh, it's going to go back up, it's going to go back up, it's going to go back up, and then they look and they're 50% down on their position, thinking, what have I done? Why have I held on for this for so long? And you know, it's stop losses are going to fix that. Basically, you never ever want to just hope something's going to turn around. You just want to get out of that trade and on to the next setup, basically. Okay. So that's point number 2, that you've thought through your stop loss. Okay. Point number 3, that you've thought through the take profit of the trade. Take profit should be placed at an area of high resistance where price is likely to reverse. There can be multiple take profit levels. Okay. So for example, when we're going back to this, you know, I take, you know, obviously if you're looking at this, then you would say your take profit level is the weekly resistance. But what you could say is you have a medium take profit level, or a take profit 1, high to low, and you could say, for example, your take profit 1 is the 618 resistance. Okay. Or you could say 382, 618, then close out at the weekly. Okay, so then you have 3 take profit levels within that setup. E.g., you're not just buying something and thinking it's going to go up and up and up and up, because nothing goes up and up and up and up. Okay, you get hit resistances, hit targets, and retrace. Okay, you either hit a target and you retrace all the way back down, or you hit the target and you can buy back lower before it continues. Okay, so you always take profits. Okay, so that's number 3. And then lastly, reviewing these 3 criteria, after reviewing them, and you've got 3 tick boxes so far, the 4th, and arguably the most important, is that the risk to reward of the trade is at least 2 to 1. Okay, so if it needs to be at least 2 to 1. So let's say, for example, just don't follow this one, but just for the sake of an example, that we've identified that we want to buy on daily support, we want to have our stop loss below the lows, and we want to target weekly resistance. Okay. So let's just do this. Okay, so we'll take out our long position tool, which obviously on TradingView is located under the prediction tools on the left and long position. We are clicking on daily support to enter that long position. We have thought to ourselves, okay, let's place our stop loss below the low, which also coincides with EMA support, for example. Let's just say we wanted to do this, and we want to target weekly resistance. Okay, and we would say to ourselves, okay, a 2.6 to 1 risk to reward ratio, is that above a 2 to 1? Yes, it is. So arguably, yes, we can enter that trade. What I've put here is preferably 3 to 1, because newer traders really want to be taking at least 3 to 1 trades, where maybe then you could be looking at like a lower level sort of thing to get at least a 3 to 1. Okay, newer traders I generally would recommend it do at least 3 to 1. More advanced traders can aim for those 2 to 1. Basically, it just all goes down to your win rate. If you've got a high win rate, then you can take 2 to 1 trades. But if your win rate is lower, then you need to be aiming for higher risk to reward trades. And it just means say you have a every trade that you take is at least 5 to 1. Okay, then you can win like 30% of your trades and be profitable. Okay, so you don't actually need to win a high percentage if you're taking higher risk to reward trades. Okay. I can explain that in more detail in another stream if people would like me to go over that in more detail, but essentially that's what I mean there. Okay, so then wrapping this up, so these 4 factors are crucial to be thought through before opening any trade position. This will greatly help with your trading studies and the emotional side of trading. For example, it will help with never FOMOing into a trade, never panic selling, as entry is well planned and well thought through before entering. Okay, as a full-time professional trader, I still only take a trade if the risk to reward ratio is more than 2 to 1. If it is less, I simply would not take that setup. I would just say, okay, this is not the setup for me, move on to another one. Okay, as a newer trader, I would recommend not to take any trade with a risk to reward of less than 3 to 1. The reason for this is you can have a lower win percentage and still end up profitable. Okay, one more note of risk to reward: just because risk to reward is high does not signify that the trade is to take. You must be entering and exiting the trade at an area of the chart where probabilities are in your favor. By this I mean that you have done your technical analysis and identified a trade with a high probability of success. For example, an entry is taken from a Fibonacci retracement 618 that lines up with the daily 200 EMA support. What I mean by this is you cannot just randomly take out the position and say, oh, here I am with a 4 to 1 risk to reward ratio trade, I'm going to take it. So you can't just randomly take this tool out and say, oh, it's a good risk to reward ratio trade, I'm going to take it. No, so you have to use the tool and actually use a proper stop loss and a proper target, and then say, is it a good risk to reward ratio trade? Okay, yes it is, because you've thought through the entry, the stop loss and the target. You can't just randomly enter and say, oh, it's a 4 to 1, I'll take the trade. Okay, so just mean that you have to actually think it through before you enter. Okay, so that covers that sheet that I've made up for you all. I will upload that to the website, so you can all come and print this off if you would like. And that should hopefully be beneficial to you all. Okay, especially the newer newer traders. Okay. So yeah, that leads us on to the next section of the live stream. Yes. Okay. Yes, I will. Yeah. Just so you know, I will just show you quickly. So this is uploaded on the website now. So on the website, you can actually just come in and actually view this PDF document. And I think you might be able to like print it and things, pop out maybe like save it and print it. Yeah, you should be able to do that. So that's on the website. You can go get that after this stream. So very cool. So moving on. So moving on to triangles, and I wanted to cover triangles today because there are so many. Okay, so many triangles at the moment. You go to an altcoin and you're probably going to see it in a triangle. Okay, so that's why it's really, really key. Okay, that you know how to trade it, or know how I trade these triangles. Okay, because I love trading triangles. They're actually very easy to trade, and because you see them most days, it's just a key fundamental, and how to trade triangles well. Okay, and the amount of questions I get about triangles are high. So yeah, really wanted to do this. Okay. So the ascend. So you obviously got. Firstly, you got three types of triangles. Okay, your main three types of triangles that I'm covering today are going to be the ascending, the descending, and the symmetrical. Okay. So they all are obviously in a family together. Okay, so these three types of triangles are in a family of, closely knit continuation triangles, generally speaking. Okay, what do I mean by continuation triangles? So as viewed in this screen, okay, we imagine this is our candles coming up, okay, and then you form an ascending triangle, for example, and then price continues up. Okay, so if you go into it from the bottom side and form a triangle, then you imagine to leave from the top. But if price was to come downwards and then form a triangle, then you would actually expect it to continue to the downside. So generally speaking, triangles are continuation patterns, and then you form an ascending triangle, for example, and then price continues up. Okay, so if you go into it from the bottom side and form a triangle, then you imagine to leave from the top. But if price was to come downwards and then form a triangle, then you would actually expect it to continue to the downside. So generally speaking, triangles are continuation patterns, and ascending triangle does not necessarily mean a bullish pattern. If it's come from the downside, I would then argue it's 50-50. Okay, so although an ascending triangle, many people think it's just automatically bullish, I would always say what direction has it came from, and then I'm going to go over actually in live examples how I trade them. Okay, but this cheat sheet is just for a general overview. Okay, so obviously the ascending triangle is a continuation pattern. Okay, so it's a triangle shaped with horizontal top and an upsloping bottom. So if you have your higher lows with a flat resistance line. Okay. So price should touch the top and bottom of the triangle several times and not leave a lot of white space in the triangle. Okay, so what I mean by white space, because a lot of people don't understand that, white space just means something like this. Okay, so let's say that we had, by the way, if you don't know how to, so what I mean by white space, because a lot of people don't understand that. White space just means something like this. Okay, so let's say that we had, by the way, if you don't know how to use this tool, it's a really nice triangle tool. It's just on the left hand side and you've got triangle pattern. Okay, so let's say that we had a triangle like this. Okay, so we have a nice descending triangle. Okay, and you would generally just touch once, touch once, touch once, touch once, and it's going to automatically draw your triangles out for you. Okay, so let's say that you had a descending triangle then like this. Okay, and you went touch, 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 what, touch, 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 touch. This isn't a descending triangle because this is white space. Okay, you have to see your triangles that are going very nicely from top to bottom like this. Okay, and then you can look for your breaks. But if something is going and then you just never touch the bottom again and then you go like this, that's not a valid triangle because you have so much white space with no touches. So white space is a real key metric. That I basically see too many people drawing triangles when this is a major thing for me, that if it's got too much white space, it is not a valid triangle pattern. So you need to be really careful and be, just be vigilant of looking for white space, because if there's too much, it's not valid. Okay, so price should touch the top and bottom of the triangle several times and not leave white space in the triangle. Okay, so another key, as I mentioned earlier, obviously I'm really key on volume. I think volume is a very important metric when trading. Okay, so volume obviously can be used for confirmations or bullish or bearish signs on a chart. Okay, and as you go through a triangle, so you would have an uptick, an increase in volume as you start the triangle. So the entering of the triangle, upticking in volume, but then as you go through the triangle, so as you move through the triangle, the volume will decrease. Okay, so you're moving sideways essentially on decreasing volume, and that's fine. That's what you want to see. You don't want to see a triangle underway with increasing volume each time. No, you want to see a triangle actually moving obviously within its pattern, within its triangle pattern, with decreasing volume. So as you move along the triangle, you want to see that volume decrease until you reach the apex of the triangle where the volume is nearly say non-existent, very, very, very low volume. Okay, before the break of an apex of a triangle. That's what you want to see. Okay, And then obviously when you break up from your triangle, that's where you then see your increase in volume. Okay, so you're moving along, decreasing volume, decreasing volume, decreasing volume, decreasing volume, extremely low volume on the apex. Then you break the triangle with a big increase in volume, and that's your confirmation that that was a valid triangle pattern, and you can, you know, look to market by that. I'll explain how I trade it in a second. Okay. But the targets that you get for these, you can just literally take the price range of the high, or from here, for example, from the low to the high, move that across to the top of the triangle, okay, and that's going to give you your target. So as you can see, this was a 146 pip move, so your target is 146 pips, okay, or sats in crypto, I guess. So that's how you look at your, that's how you get your targets of triangles, okay, or the ascending triangle. I'll go over them all in a second, okay. So the trade confirmation of a triangle is a break, okay, because ascending triangles, as mentioned earlier, they can break to the downside as much as they can break to the upside. So a safer way to trade these would be waiting for the break to the upside, where you would go long, or if this broke to the downside, that would be your short opportunity. Okay, so basically the confirmation is if you break to the downside with an increase in bearish volume, look for shorts. If you break to the upside with an increase in bullish volume, then look for your long positions. Okay. And you know, just because they can break either way, then that, you know, if you are trading inside the triangle, then you're not at 100% sure whether it's breaking up or down. But when you wait for a little bit more confirmation, then you can have a higher probability that you're actually going to break to the upside or downside. Okay, and let me just draw out those triangles a second. That I wanted to explain the way that I would trade these. Okay, so let's go over. You know, obviously the nicest one that we can look at straight away is EOS. Okay, so EOS had a very nice ascending triangle that I can cover for you all. Okay, let's ignore this Elliott wave count a second. Okay, ignore the Elliott wave count, and let's just look at the triangle that formed really simply on this chart. Okay, so we can look at this. Ooh. Let's just move this out a little bit. Okay, so we can look at this triangle that was forming on EOS, and I will explain how this was like the nicest trade in the world. Okay, so we are inside of an ascending triangle at this point. Okay, we're inside of the ascending triangle. Okay, and you can see volume tapering off. Okay, so we're moving along within the triangle, and the main thing, that volume is coming very low at this point. Okay, so you can see you're moving along, but the volume is coming very much downwards, so you're decreasing volume as you're moving along in your triangle. Okay, so you're decreasing volume in the triangle, then you get the break of the triangle on an increase in volume. Okay, so that's the key. Okay, and now the ways that you would trade this, because, you know, trading the triangle, very important. Okay, first way, take your measured move, you know, your price percentage from the bottom to the top of that triangle, right click. Okay, right click, the way I do it, actually, I'll just explain the way I do it. Just hold down control and click, and that clones it. You just want to clone it, so, or you can right click and clone, but I just hold down control and that's going to do it for you. And then move that to the top. Okay, move that to the top, and that would be your price targets. Okay, so that would be the measured move of the triangle, which obviously hit further down the line. Okay, but again, I would always say you don't want to just randomly look at the target and forget about it, because if you actually look at this where it rejected in the end, where were we here? Okay, you can see there in the end, you know, we were getting a rejection from the daily 200 exponential moving average. I remember I traded this one really well when it happened. But yeah, that's how you get your official targets from a triangle, the measured move. Okay, and now I'll explain the way that I trade triangles. Because I don't wait for confirmation generally of it breaking to the upside. Okay, I prefer to enter triangles inside of the triangle. Okay, so while you're still inside it, I prefer to enter. Okay, there are times where I will wait for confirmation from a break, but generally speaking, I prefer to take a higher risk, higher reward trade. Okay, so entering within the triangle, you have more risk because it could break to the downside. Okay, but I prefer entering these trades. I'm happy with the, you know, the risk, increased risk for an increased reward. Okay, and you know, I just remember, because I remember this EOS trade so well. You know, at this point we're obviously forming higher low, higher low, higher low, higher low, higher low, higher low break. Okay, so that's a series of higher lows coming up to the top of resistance, breaking upwards. Okay, so, you know, you're like generally I will always try and get my position entered inside of the triangle at some point. And this EOS trade, that's just an example because I can remember it really well. Let's just say, for example, on a normal triangle, I would generally look to try and enter my longs at the bottom of the triangle because I'm going to have a much higher reward. Okay, and let me just explain something really quickly while I will explain this. Okay, so let's say that we got our triangle moving upwards like this. Okay, and we're going from like this. Okay, so when you're looking for your breaks, when you're looking to place your longs on the bottom of the triangle, okay, you can use the last low of that triangle as your stop loss basically, and then you could go like this. Okay, and then you would obviously look for your measured moves of the triangle for a target. Okay, so you'd be looking like this for your targets. Okay, and I would always try and trade my triangles like this. Instead of waiting for the break, I want to get in at the lowest point for a higher risk, higher reward trade. Okay, I'm very, very aggressive in my trades. But yeah, I would always try and trade at the bottom of the triangle. Okay, even though I'm aware that it could break down, but I'll just get stopped out. So, you know, it's not the end of the world. So I will enter the trades, stop loss below the last low of the bottom touch. That would be my invalidation level. That if price did come down and broke that low, then that's a break from the triangle where I would want to enter a short position. Okay, so let's say that I was taking a long here, stop loss below these last lows, targeting here, and I got stopped out of the trade. Well, then I would just take that loss and I would actually then flip into a short. As you get a retest, generally you're going to get the retest and then come down, and then as I retested, or as price retested, that would be my short, stop loss back within the triangle, and then going for another measured move, but this time to the downside. Okay, and that's how I trade triangles every single time. Okay, I'm a very aggressive trader on triangles because I love them. They're so easy to trade, have real clear invalidation points. That's what you want as a trader: a clear invalidation, a clear target, and a clear stop loss. Okay, and let me just show you this real nice EOS trade. Okay, so this one actually retested perfectly. So the ways that you would trade triangles, you would either try and get in at the bottom of the triangle. Okay, you would be the trader that just market buys as soon as you break up. So as soon as you break up on this volume, you see the increase in volume straight away. You market buy. Okay, so you have three types of traders essentially. You have the four types actually. So you have the trader like me that would try and buy the bottom. You would have the trader that just market buys a breakout. You would have the conservative trader that sees it break out, is very patient, waits for that retest, buys the retest, and then it goes. Okay, you can just see this EOS triangle, how perfect it is. Really, it literally got the perfect retest. I mean, if you're taking it up obviously to the height, so you look at this high of this candle. Okay, we're looking at the high of that candle there, and you can actually see the perfect retest, okay, from the high of that candle, which would obviously then be your resistance line. But you can just see that's the retest, and obviously the retest trader, okay, and obviously the market trader just market buys. The retest trader would look for that retest, stop loss back within the triangle, and then aim up again for like your measured move or weekly resistances, etc. But that's how another way that you can trade the retests, looking at that retest. And the fourth most conservative way you can get as a trader, okay, is actually waiting for the retest. So waiting for that retest and then waiting for it to take the high of the low of the high that retested it. So you would wait to take this high, and then the most conservative trader would actually not be taking this long position until it took out the high. So you break up, retest is a fairly safe buy, but some traders will not want to take the retest because you could obviously just you could retest and come straight back down. So the real conservative entry is waiting for it to retest and then taking the highs of where it retested, because then if you take that high, you obviously then formed a high, a higher low, and then a higher high. So as soon as you break this point, you're going to a higher high territory. So that's obviously your positions where you're looking for those breaks. Okay, and then obviously, EOS broke up massively to, in the end, third weekly daily resistance there. But look at this again while I've got EOS here. Look at the flip. Look at the flip. Resistance flipped to support. Okay, how easy of a trade. How easy of a trade. Buying the flip, stop losses below the flips. Okay, and then, targeting up to your next weekly resistance, for example. A 12-to-1 risk-to-reward ratio trade. And that is just flip, literally a flip followed by another flip. Like how easy, okay. So that's EOS and the ascending triangles. I hope you have a good understanding of how I'm trading those ascending triangles, okay. And if you have any questions, let me know at the end, okay. So that's the ascending triangles, okay, and there's the EOS ascending triangle. Next, descending triangles, essentially the same theory, This theory is set. This is the same. It's just you've got a descending sloping line and a flat base of support. But the way you get targets, the way you take the trades are exactly the same. Okay, so you still want to see your decreasing in volume. Okay, you're aware that it could break to the upside, although like this generally you have maybe a 51% chance, for it breaks to the upside because it's an ascending triangle. It's showing buying pressure coming in, showing a form of accumulation with higher lows. Okay, this is obviously showing a form of distribution with triangle if it comes to the upside, and it's obviously you definitely, if it broke to the downside and it was forming a descending triangle, then you are definitely shorting. And obviously in the ascending triangle, if it comes to the upside and it's an ascending triangle, you'd definitely be looking for longs. Okay, it's just like if you have a descending triangle that comes to the upside and forms, then it's more of a 50-50. But if it forms like this, then you're looking for the shorts at every single high. Okay, as you know, essentially they're the same theory of what I've just covered with that ascending triangle. I'm looking to trade it the same way. I'm still looking to enter my shorts on the high points. Okay, obviously the best example that I can give you, and as you all know, throughout 2018 I was killing this market with shorts. What on? The Bitcoin descending triangle. Okay, so this is now another tip that I'm going to give you with how I trade descending triangles, or how I trade triangles in general. Okay, so let me first explain here how I trade triangles very, very nicely. Okay, and this is a little bit of Elliott wave theory for you. Okay, so the way that I like to trade triangles, okay, we are looking for essentially we're going to be looking for something along the lines of this. Okay, this would obviously break to the upside, but we can flip this around for the sake of this video and actually say that it's a descending triangle that's going to break to the downside. Okay, just to keep it really simple. Okay, so what we're looking at here, let me just add on these wave points. Okay, and I'm going to be covering Elliott waves, by the way, in a live stream for you all in so much detail. But for now, we're just viewing this simply as some touches, okay? And the way that I like to get my targets, okay, is 618s, okay? So when I'm targeting the 618, so let's say this obviously come from the downside here and formed a low, then I'd be taking my fib from the high down to that low, shorting to 618, okay? Down to support, okay? Looking at, and actually at support I would look for a, you know, a long position, but nevertheless let's keep it simple for this video. Then the next one I'd be going from high to low, looking to short to 618, okay? And the thirdly, from high to low, looking to short, obviously I would want to see it within the trend line really, but looking to short that 618, because you can get overthrows of the triangle, so you can get slight overthrows. So that's an overthrow, and on the wave E you can also get like underthrows where it actually maybe only comes to here and breaks down, okay? Or maybe then you actually break down at the 236. Okay, so I like to use Fibonacci when trading my triangles basically, and that's the way that I like to trade them, with 618s generally. Okay, so now let's go over Bitcoin, and obviously where it had its descending triangle really quickly. I would just like to cover this, okay, because you all know that I traded this like an absolute king. Okay, so yeah, we obviously have this like here, okay, descending triangle. If anybody thought this was going to break to the upside, you really need to question them as a trader. It was never ever breaking to the upside. This pattern was the most bearish pattern I've ever seen in my life. Coming to the downside, okay, so you're coming from a downsloping channel, and the you know, firstly the sentiment was so bullish it was unreal. That's a good sign you're going to break down. Secondly, you're in a descending triangle, so you know it was so obvious, in my opinion, that we were breaking to the downside, and obviously downside it happened. But nevertheless, what I wanted to show you here was how you hit the 618 each time, where that's where I was taking my shorts throughout 2018. High to low, look where we hit. Okay, let's just remove these levels off the chart temporarily. Okay, you can see here, we hit the 618, got rejected down to support. Okay, brilliant. Next time, we go from high to low. Okay, here, you can see very well, you got slightly front run at this point, but basically another 618 rejection. Okay, so another 618 rejection. Okay, and then where we're looking for our E wave here, okay, you can see from high down to our low at this point, you hit the 618 exactly. Okay, exactly hitting that 618. Okay, and again you fall down totally. Okay, so that is like how I trade triangles, looking for those shorts on the 618, and you all know that I traded this like a beast, Bitcoin, doing those shorts last year. And that was why that triangle was just so easy to trade. Okay, so that leads us on to our last triangle pattern, which is the symmetrical triangle. Okay, and this is a total continuation pattern, so I would hold no bias with this. Generally, it's whatever. If it comes from the upside, I would look for it to break to the upside. If it comes from the downside, I would look for it to break to the downside. It's a continuation pattern in its purest form. Okay, if it comes from that downside, look for the upside. If it comes to the downside, look for that downside again. You can be looking for longs at the bottom of the symmetrical, or you can wait for the break. Okay, up to you. Okay, that's your choice. But again, the symmetrical triangle is a continuation pattern. Okay, but it's obviously two lines are converging in on each other. They converge in on each other. Okay, so again, as with the other two triangles, price should touch the top and the bottom of the triangle several times and not leave a lot of white space. And again, the volume will diminish and go downwards essentially as you are progressing through the triangle, and then you have an increase in volume on the break. Okay, all I would say is that if you do not get an increase of volume on the break, well then actually it was likely a fake false breakout. Okay, what do I mean by a false breakout? Let's say obviously on Bitcoin here we load up our volume, and you can see that you break on an increase in volume. Okay, so obviously, like I was saying, you get to the apex of the triangle and volume is almost non-existent. Okay, you're reaching the apex of the triangle, volume is almost non-existent. That is totally normal in a descending triangle. Anyone that got bullish here, absolutely crazy. Okay, they lost a lot of money, but here you're reaching the apex. Literally, the apex couldn't have gone up on much longer on no non-existent volume. Exactly what you want to see, and then you break the triangle, and there's your increase in volume. That is a confirmation of the break. And if you were long, you would obviously try and get out straight away, and you would want to try and short, if you were not in a short, a retest. Okay, and obviously because of how bearish it was, your retest was very limited. You tried to retest it, but there was just not enough buying volume to even retest fully. So you would have had to have done the best you could, and have entered an aggressive short entry straight away. Obviously, always looking best to get your short entries at the top. But you did have that slight chance to get in. Where you had a little bit of fight before you just totally sold off all the way down to 3,100. So yeah, that's what I just wanted to. I can't remember what I was going to say there. Oh yeah, showing you how the volume decreases, and that's an example. So again, the targets, you can do the same way of getting targets. Okay, and the trade confirmation of a triangle is, you could wait for the break and just go long if it breaks to the upside, short if it breaks to the downside with that increase in volume. If you do not see the increase in volume, then wait for a retest, and then you could trade that retest or you could, you know, let's just say, for example, that Bitcoin didn't break up with volume, and you know, it just comes straight back in because it broke out of the triangle, and there was still no volume, and then you would say, that's probably a fake out of this triangle, and look for it to come back in. So volume is very, very key basically when trading triangles. Okay. And here's an example of Raven, so Raven coin. Let's go over to Raven and see if it's still within this triangle. Might have changed after Bitcoin. Let's just see. Raven coin. Still within it. Okay, it's going to still be within it. Okay, so obviously you can see here. Okay, ooh, nice. So here we need to go down to like a lower chart. Okay, so this would have I'm saying nice because I didn't even realize, but I would have had a position filled off of this. Okay, so you know, when I'm looking for those aggressive type of entries, okay, you're looking for the bottom of the trend line. Okay, so you're looking for the bottom of the trend line. Okay, where you can even be looking at, you know, I was looking obviously this as a B, C, D, E, but nevertheless, it's sort of looking for the entries, okay, at the bottom of the trend line. And obviously the way, you know, if you want to use a stop loss, for example, then you could be looking for your long positions at the bottom, okay, stop loss below this low of the C, okay. So you look for obviously your A, B, so your W, you get an X wave in you get an A, B, C, D, E in the X wave. A, B, C, D, E, A, B, C, A, B, C, A, B, C, A, B, C. Okay, again, there's no guarantees in this trade. There's 0 guarantees in this trade, but that's a nice area entry, stop loss, target. Okay, and you know, if you are really scared, then you could move your stop loss up to break even. I won't be doing that. But some people like to move their stop losses up to break even really quick, but yeah, I never do that. But yeah, that's Raven, obviously still within that symmetrical triangle. Okay, and again, if you want to wait for the confirmation, then wait for this to come up here, wait for it to break, and then go. Okay, and that's obviously a while off on real, you know, that's another 5% up to the upside. Okay, but all you would say is, you know, where's your key resistances at this point? It's right on the top of that symmetrical triangle. So, you know, you could wait for a bit of confirmation here and take a less risky entry and wait for this to come all the way up to here and then trade the breakout, for example. But not financial advice, but, you know, I just wanted to give you an example of a symmetrical triangle, and that's Raven coin. Okay, so that has brought us to the end of today's lesson on triangles and how I like to trade them. And all I would say is I trade them extremely well. So yeah. So yeah, moving on to Bitcoin technical analysis for you all. If you do have any questions of what I've covered today regarding triangles or regarding the checklist, please let me know now. And as I'm doing the Bitcoin technical analysis, I will answer your questions. Okay. So yeah, please ask any questions that you may or may not have now as I go through this on Bitcoin. Okay, let me just, before I start here, read through the questions really quickly in case I have missed anything already. This is so good. Oh, thank you so much. That's a great setup. Yeah, again, doesn't matter. It's a great setup. I just meant saying your buy below the wicks, wondering if you need to have a lot of size to get that filled. The more capital you're trading with, the harder it is to fill. So that's why I place it below the liquidity pool. But you don't need to do that. That's just what I do. You know, I don't imagine most of you are probably going to be trading with so much. So like, you can fill like 1 Bitcoin, 2 Bitcoin positions so easily. Like you can just buy anywhere pretty much, and you'll get filled. You know, you don't have to worry too much if you're playing with 1, 2 Bitcoin. But anyway, moving on. Why would you put your stop loss there? Isn't that also a liquidity pool? No, so I guess you're referring to this ENG trade. So this is the thing. I've got so this is a buy wall essentially that I'm imagining it's going to hold up the price. It's like it is, I would say that the liquidity pool is not at this stop loss region. Okay, if price had come through this, well, there's no swing failure pattern. Okay, let's load up the chart a second and explain ENG. So if price had come down to my stop loss, which was around here, well, then it's not, firstly, it wouldn't have formed a swing failure pattern. Secondly, I wouldn't have held up any price at all with my buy wall, and it would have got obliterated, and I would have just wanted to be out of the trade. Okay, so that for me is not a liquidity pool down here. That's not a liquidity pool. The liquidity pool is slightly below the stops. Okay, give it a few percent. Okay, you know, small percentage for that swing failure pattern. Okay, but this all the way down here is, if you come down that far, it's not a, well, it could be, but it's generally not going to be a liquidity hunt where you're going to get a swing failure. It's just going to be, actually, it's breaking down. So yeah, that's why I placed my stop loss there. That gives me enough room. That's nearly 2.5%. So that's that question done. Please can we have access? Yeah, so they're on the websites. So awesome to see this, EOS. You make it look so easy. Thank you. Lost more than 50% of my capital in that time. Longing BCH following. Oh yeah. Just block the noise. Okay, so yeah, that moves us on to Bitcoin. All right. So Bitcoin. you know, there's obviously a lot of things to go through on this chart. And where are, oh no, I removed all my levels. Oh, that's a little bit annoying. I had some nice levels in here. Okay, so we were on weekly resistance. Let's just quickly add this back in. Okay, so we were looking at weekly resistance around here. Okay, so we obviously have our weekly resistance here. Added back in. So let's go back into it. So anyway, what we're looking at here, okay, we're looking at weekly resistance 8,219. As you can see today, we have got rejected at that weekly resistance point. Okay, I just want to clear everything here. So we're looking at weekly resistance 8,219. We now have the 382, which was resistance, resistance, resistance. The possibility of this now flipping into support for the next move up to the upside. Okay, that is what we want as a bullish scenario. The bullish scenario is 382 now really needs to hold. Okay, you really need to hold the 382. Okay, and you know, the bears need to reclaim 382 basically. Okay, so the bearish scenario is that you have an ultra small stop loss, okay, and you can be aiming down for those lows, or even if you give yourself a wider stop loss, for example. But nevertheless, the bulls really need to hold this 382 level now, because that will be a key SR flip at this point, where then you can move up to challenge. My next challenge would be the 618, basically. That's the next level. But you do have a daily in here as well. So it's basically the weekly. Not that strong actually. So I'd be would be looking at this 618. That's for me, it would be the strongest level. This 8,400. If we hold the, you know, first you need to hold the 382, then break above that weekly, then challenge that 618. That would be the key. Slight, you know, we always have to remember of a front run, so you might get slightly front run, but there will be algorithms going from the 0.5 to the 618. So this is a resistance region. Okay, it really is. You obviously have got slightly front run on the 0.5 at this point, and that's why it's so key for me, the 382 level. So I like to take it one step at a time. Okay, so obviously I was very bullish. Okay, you all know that in the chat today, I was remaining very bullish for you all. And what was extremely funny, what was it? Where's this post? That yesterday I made a post saying the most volatile times for Bitcoin. Okay, I cannot find it at the moment actually, but I made a post saying the most volatile times for Bitcoin. Oh, here we go. The most volatile times are 4, 9, and 6. Okay, and we literally got this break today at 5 minutes past 4, and that was yesterday. You know, 2 days ago, saying that these are the volatile times that you want to keep an eye on, and that just goes to show, keep your eye on these are GMT +1 times, England times. I'll convert those into UCC, but these really are the most volatile times for crypto, and literally on that 4 o'clock candle, getting that break upwards. So yeah, moving onwards. I would just like to really stress that that for me is the next really important level that you're looking at. Do we hold the 382? If we do, then safely I will maintain my longs basically. Okay, and I'm looking then for the 618. Okay, but if we actually break through the 382, close and reject, then that's bearish. Okay, and we can come all the way down to the bottom of this range. So that's the key that I'm looking at short term, really simply. And I still maintain trading alts much more. So I'm trading alts much more aggressively, and like my general day trading is not Bitcoin too much actually, and it's more trading altcoins. But this is obviously good for me, like good altcoins if Bitcoin maintains above the 382. Obviously if you start getting that rejection, then that's not good. But you know, that's what I'm looking at short term, this 382. 618 resistance, obviously your monthly resistance 9,250, weekly support all the way down now at 6,817, weekly resistance 8,219, and then you have 9,900 monthly, and you know, you have some key fib levels, so the 1272, 9,567, so 9,600 basically a big resistance point. So you know, have these like key levels, and I don't like to go over too much Bitcoin technical analysis because I do that in public. You don't need to cover it in too much detail for you all here. But those are the key levels that I would be looking at, basically. Okay, the 382 would want to see this hold of support for a bullish to maintain my bullishness. Okay, I've been bullish for a very long time now, and it's played out very well. But you know, I would want to see that hold. Okay, if we start to go down like that, or I would take that into a big, you know, really be affected, or you know, could change my viewpoint basically if we break down from the 382 like this. Okay, that would be a big factor for me. I would like to see this maintained. Okay, obviously it's not the end of the world if you break down from there, because you still then have lower fib levels to support you, but the most bullish scenario would be holding that 382/236. You can see the confluence there. Okay, so that's what I'll be looking at short term as support, and then obviously that 618 double top 250 96. Okay, although maybe we won't get that far in the week. Okay, it's just like a slow process. All I would like to end with is that generally people in crypto expect moves to come so quickly. Okay, for example, when we were in the sideways range, I loved it. I loved sideways ranges. They're so easy. Okay, literally so easy to trade, and this was actually like even easier because you actually had a low, a higher low, a higher low, and a higher low. It's just like you're going to be breaking up, and I obviously posted this in the chat today, like, well, I don't even need to prove it to you all because, you know, but I was like, yeah, I'm bullish. This is consolidation under resistance. We're, you know, it's very probable that we're breaking up, and I am on the bullish side. I am playing this long. Okay, and then obviously, you know, later in the day we break up. Nice to see, basically. And it's just like, you know, the signs were definitely there, and anyone that was bearish at this point again, I just don't understand. But yeah, that is a very bullish sign. High low, high low, high low, high low, consolidation under resistance. You break up, and that's exactly what I said today. And then you break up. So yeah, got it right. So you know, that's what I'm looking at short term, 382, and then obviously, you know, this weekly resistance you're on now, okay? And the same kind of thing with like Litecoin, obviously reaching those resistance points. Like Litecoin has obviously been the leader, okay? But you can see here, my obviously 236, 618 is so close to be reached, but that target is 148. But I was building that short position anyway. But yeah, Litecoin has still got some legs on it if it can hold these support levels. Obviously, you can come and backtest this channel. Okay, so it could come down and backtest that channel. That's a really nice one, by the way. But yeah, that's mainly focused on Bitcoin. But yeah, that is everything that I wanted to cover here. You still see Bitcoin going to 7,200, right? Not really, okay? So obviously, again, like you want to take it one step at a time. If we hold a 382, then no, why would I don't know. I wouldn't see Bitcoin going to 7,200. Like this is the thing. If you think Bitcoin's going down to 7,200 and you do this and you break up from resistance, like you need to lose those opinions, okay? Because it's just an opinion. If you think Bitcoin's going down to the key word there is you think Bitcoin's going down to 7,200. As soon as you have an invalidation of something happening on the chart, you need to just throw away your opinion and just trade with that chart, okay? So when you break resistance with a 382. And you obviously you're on weekly resistance, so you want to back test and hold this 382, okay? And if we break down from here, then obviously you're looking at 7,200. But it's not the most probable to happen at the moment. The most probable is that you back test and move up, okay? And it's all about probabilities in trading, okay? I don't have a crystal ball. I can't tell you what's going to happen. I can just tell you the most probable. And obviously I'm very good at getting that right. So yeah. I was bullish too, even before the BTC pump. Well, that's good, and hopefully I affected you from that, because I transmitted my bullishness to you. Does consolidation on top of support indicate a bias? So generally, if you consolidate below resistance, then it's bullish, and if you consolidate below support, then it's generally bearish, okay? So you obviously see, looking back through Bitcoin, consolidation on support breaking downwards. Again, if you draw that symmetrical triangle, like descending triangle a little bit there, you consolidate, break down, consolidate, break up, consolidate here, obviously, when that was your resistance line at this point, and you obviously breaking up. But, it's generally that, okay? So it's not just a hard built-in rule. You cannot just say consolidate, obviously that's what you're looking at for your, your probabilities again, but it's not like a hard built-in rule that you have to break up from this. It's just more generally that you will. And again, if you're like hitting support and you're just bouncing on support really weakly, then that's obviously looking bearish, because the more times you test it, the weaker it gets. There's only so many times you can hold it up, and there's only so many times people can sell before you break through. Yeah, so yeah, generally consolidation on top of support. If it's like just bouncing and there's nothing happening, okay, support is slightly different, because it could be you want to really, like, a nice way to look at it is, are you getting bullish divergences? So are you getting bullish divergences as moving along, or are you getting bearish divergences? That's kind of a key metric to look at to help determine whether you're in distribution or accumulation. That's something you can keep an eye on. But volume, divergences, etc., keep your eye on. So yeah, I'm going to wrap up the stream tonight. Hopefully that you have all enjoyed this and learned a lot from this session. Okay, so obviously I've given you some key points. So the very beginners are going to love that cheat sheet that I've given you all with your tick lists, that you can print that off and have several copies, so you're entering that each trade. Okay, and then how I've traded those triangles. I've explained how I've traded triangles, how I trade triangles going forwards. Very nice to see. Woo! ZEC USD 14% to the upside. This is one that I covered 40 champions at end chart of the week on the champions, and I was literally making this live stream at the bottom, at the very, very, very bottom. I said I'm still staying in this long position, and now look at that. That makes me very happy. The biggest mover on the whole chart, ZEC, and this is what I covered in the champions live stream at the very bottom, saying I was buying here. And results speak for themselves. I don't even need to say anything. Results are speaking for themselves. Wow, very nice. So yeah, there we go, everybody. I am going to wrap up the live stream here. Hope that you've all thoroughly enjoyed this. All I will say is a real quick, obviously, announcement then. Let's just this end with this, okay? That we obviously do have a customer service, like employees now. So if you ever have a general question, then I would generally say you should ask the customer service me, because I'm so busy in the day, like trading, doing other things, like, generally if your question is like a basic question, then please just direct it to the customer service. That's what they're there for, to help you out and answer questions, rather than like using up my time through unnecessary questions. If it's relatable, then absolutely fine, but if it's a general question, please just go to customer service. They will help you out, okay? And yeah, just want to really highlight customer service, and obviously we've got moderators, so yeah, very, very nice that we have those in Chart Champions. And yeah, hope you like this top, by the way. Look at that swag. So we have some like t-shirts and hoodies, very nice indeed. So yeah, I'm happy about that. Yeah, there we go, everybody. I'm going to wrap up the stream. I will catch you all in the chats. Okay, so I'll catch you all over in the chat. And yeah, hope you have a great evening. And I will catch you in the next live stream. Obviously, the next live stream is the Champions live stream on Sunday. Okay, and then our next Contenders live stream will obviously be next Wednesday, always the same time, 6:30 UTC. Okay, that's obviously 7:30 GMT +1. So yeah, catch you all in the next live stream, everybody. Have a brilliant day. Have a brilliant week. Go over and check the those cheat sheets on the website. And yeah, I'll catch you around in the chat. Have a brilliant day. Thank you so much. And yeah, smash those charts. Cheers.